The first quarter Manhattan residential real estate report by Corcoran was published this week. And if you've been following my videos, you know that the market has been on fire, and the first quarter was no different. We saw closed sales of 3,664 units, marking the strongest beginning to a year in 15 years. Now, when we look at closed sales, we're looking at deals that were done 3 to 6 months ago. So we really want to take a look at now to see if the momentum was there is signed contracts, and signed contracts remain strong. We are at 3,978 for the first quarter. It really was quite 3 months. The report also shows that the average price per square foot in the first quarter jumped 25% to $1,816 per square foot. Now, that's largely due to the fact that the luxury market, defined as $5 million and above, showed consistent returns week after week. We saw anywhere from 25 to 40 contracts signed, and that's what pushed that number higher. The median price only jumped about 9%, but we are seeing price appreciation. Now, interestingly enough, when I dove into the numbers, what I found was that the 2 bedrooms really jumped the most, and more so than even the larger apartments, which I believe many of those went last year. So if you're in the 2-bedroom category, you were paying 8% more for a co-op, but you were paying 17% more for a condo. And you're always going to pay that premium on a condo just because of the flexibility of usage. So if you were in the market and you want a 2-bedroom and you want value, I would stick to co-ops as long as your primary residence or a building that allows pied-à-terre if that's how you're using it. Now, in terms of neighborhoods, the Upper West Side and Upper East Side saw the largest price appreciation. The Upper West Side notched an 18% gain, while the Upper East Side saw a 17% gain. Where we go from here in the Manhattan residential real estate market is fairly uncertain given the global political and economic disruptions that we've witnessed in the past 6 weeks. The inventory levels in Manhattan as of the end of the first quarter were down 25% from last year at 5,961. As of today, they are at 8,180, which is equilibrium for the market. Many sellers who were waiting for the warm weather to bring their properties to market jumped in a few weeks earlier as they saw that the interest rates were rising. Now, as of yesterday, mortgage rates were topping 5%, and the mortgage rates could increase further if the Fed continues to raise rates as planned. Now, if there's a silver lining in any of this, it's that we do have a new source of demand, which is the investors. I am seeing investors back in the market as they are seeking a long-term safe haven while the financial markets continue to be somewhat unpredictable. Okay, I just threw a lot at you in a very short video, and I know from my conversations with buyers and sellers alike, they're a little bit frustrated with the market because they're equating it perhaps to their experiences in suburban markets or elsewhere across the country where homes continue to go over asking, no contingencies of any kind, including inspections. Stories of people buying properties sight unseen are very common. But remember, Manhattan's an island, and it's always been its own particular market. If you have questions about how you should proceed, I am more than happy to talk to you, even if you're just thinking, oh, I'm not going to buy or sell for another year. Don't worry, I'm here to help you and guide you home.